Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Looking at SPY on the daily and weekly time frame, so further consolidation with a lower high and a lower low. We're incrementally setting lower highs here. We've got the all-time high 221.56, 48, and then 44. But this does look like normal healthy consolidation. It looks like a little bull flag pattern, which is when you can draw support and resistance in a parallel channel. Let's do that real quick. So that would be support, or resistance rather, and that would be support. So a parallel channel there. And we'll see if that pattern continues. It could take another couple of days to form. It is a bullish continuation pattern. We know the bulls have a lot of momentum, and they certainly showed up today before an end of the day sell-off. We'll look at that in a moment just on the 5-minute chart. RSI is cooling off from the 70 level. It's still in the upper 60s, but again, normal healthy consolidation, still maintaining higher lows. I'm watching 219.75, and now we have a higher low at 220.17. Weekly time frame is rejecting from the upper Bollinger Band, 221.61. So the all-time high did pull back 5 cents below that level. So we need to be watching that upper Bollinger Band as it is a key resistance level at this point. Bullish MACD cross following through if the bulls can hold up. And let's now look at the 5-minute time frame. We had a bit of a fake out first thing. We knew we were weak after the close yesterday. And we saw a quick 10-minute dump down to new lows, breaking the low of yesterday early this morning. But then this bounce started to play out, and I didn't believe this bounce for the first half hour of it. And that was because of the decreasing bull volume and the fact that looking at pre-market, it was just a lower high in this pattern. Lower high, lower lows, lower high, and figuring we would see just another lower high here as we continued the downtrend. But then once the bulls started consolidating here, and this looked like normal, healthy, bullish consolidation before continuation, peeked over at the hourly chart and saw that we were forming a bullish reversal doji right off the 100-period moving average support. We have not even tested this 100-hour moving average support in the past 10 days. So we did form a bullish candlestick off of that level, and we confirmed it in a big way. So seeing the shape of this candlestick showing up on the hourly had me putting a little bit more weight into the fact that the bulls could keep this rally up. And as soon as we broke that high of the day, that is when they affirmed control, because that is when they broke the lower high pattern on the 5-minute time frame. So 220.78 breaking was the bull signal. And then from there, we saw higher lows and higher highs for the next 3+ hours, almost 4 hours into the day. Then the red flag and the trend change came once that higher low pattern broke. So we consolidated, formed support here at 221.25. As soon as 221.25 breaks, the higher low pattern breaks, and then the bears took over for an hour of downside. There were nice bearish gains to be had there on that sell-off. A little bit of increasing bearish volume. Little short-term bounce there at the end of the day, but the bulls are still holding on to the 20-period hourly support, 220.78, holding on to the daily trend, looking strong there. So that end of the day sell-off isn't doing much to disrupt the longer-term bullish charts that we're looking at on the hourly and the daily. And we'll see what tomorrow brings. We do have oil tomorrow to be watching, and OPEC has been a factor, but looking like the market is pricing in OPEC not reaching a deal. So we'll see what tomorrow brings, and we'll check back in as always.